Hey guys, Darren here. Thanks for joining the Stock Option Market Weekly Update for the week of November 6th, 2023. We are going to touch on where we're at in the market today, what the S&P 500 did last week, where we are year to date, and we will touch on the different sectors as well and what they did last week and year to date and what it looks like going forward. Then we're going to jump into the trades that we have on the Tasty Trade option trading platform. We'll go through each of the trades, what we closed last week, and what we're looking to do moving forward. So with that said, I think it's super important that we understand the tools that the rich are using to get richer so that we can use those same tools and strategies and profit in any market. I promise we're going to dig into many detailed option trading tips and tricks. So if you haven't subscribed already, please do that now and make sure to hit the like button so that we can get this video out to as many people as possible. I really appreciate it. Also, be sure and download the free options workshop in the link below. It talks about the two main advantages of trading options over buying stocks alone outright. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. All right, let's take a look at where we are in the market today. We started the week in S&P 500, the SPX at 4117 and ended up at 4358. So we were up 5.5% just last week alone. That pretty much makes up the last two down weeks that we've had. We are up around 12% year to date. We started the year at 3824, as you can see over here, and we are up about 12%. Right now, the forward PE, the price to earnings, is 17.8 for the S&P 500, so that's right around the 10-year average of the 17.5, which is the 10-year average. As far as the week, last week, this is from Market News and Insights. The Fed held rates steady at the meeting Wednesday. We didn't expect that there was going to be a raising or lowering of interest rates, but it's stuck with a balanced tone and outlook for upcoming rate decisions, which supports our view that the Fed rate hiking cycle can be complete. So that's what we expect. I think it's not until June or July of next year that there's expected to be a rate cut. The latest employment report further supported optimism that the Fed can move to the sidelines. So no hikes or cuts going forward. And economic data supporting an outlook for both ongoing growth and a Fed that can remain on pause for a while, as well as a seasonably favorable period for equities. So typically at the end of the year, the market tends to do pretty well. We think there's a compelling case for markets to find some momentum to close out 2023 and turn the page into 2024 when earnings are really expected to do well and profitable. So for the last week, 5 days, pretty much all the sectors were up. You can see here everything. The biggest gainers were, looks like real estate and consumer discretionary and communications services. And year to date, we've still got communication services, which is those companies like, actually we'll pull it up here, but we've got Meta, Google, Netflix. Some of those stocks have really been leading the way this year. And then with technology, NVIDIA, of course, Palo Alto Networks. Wow, that's surprising. They've done really well. But they're cybersecurity, they're the leaders. Broadcom's doing very well. So all the tech is doing very well as well. And healthcare is down. I think healthcare is actually a good sector to be in going forward. And energy's surprisingly down as well. With the war, I expect energy to do very well going forward. All right, looking at the trades from last week, let's start out with forward slash 6J, the Japanese yen. I closed this one out. Unfortunately for options or for futures, Tasty Trade doesn't yet have the option chain available, so I can't show you where we close that out. But if you look at forward slash 6J, it's been way down, so I've just been selling put spreads against it. And we made a big whopping $12 and closed out last week. So I'll look to maybe put that one on again going forward. Oil, similar, crude forward slash CL. I've got two different sets. It was down big last week, down to, you can see the price here, $80 from 85 last week. I need oil much higher in order to be profitable because I sold premium, but then, yeah, I need it up here in the 86, 87, and it can very well get up there pretty quickly. But it just recently had a big move down. But yeah, you can see 86, it's only right here, and it was just there. So um, I've got some 39 days to expiration. I've got some December options that I put on last week with oil being down. And then I'm just waiting and holding. I've got 10 more days left to close out these November put spreads, but we are down. But again, I'm long oil crude. So with the war and us not being energy independent, we've talked about this in the past. I'm long crude up to the $90 a barrel range. AMD is another one that we've been trading pretty consistently. Before I get into that, I'm going to go to Apple because we did close out some Apple uh, last week. We can see where Apple is trading. This is the year-to-date chart. It's at 176, and it was at 170 last week. So um, we had a earnings event, and it did pretty well. And I have not made a ton of money. I think in the last 30 days, $14. Woo. Um, but we're out of Apple now. It's got a low IV rank of 9.6. So, I like to sell premium typically, and we are right. Oh, this is Apple, 9.6. So I'm not in Apple right now. So moving on to AMD. Let's take a look at that. It's at 112, and it had a big jump last week. It was down at 96, um, and well, I've got a lot of notes on here, um, but we're at 112, so we're in between our. We've got an $5 wide iron condor in December, and we've done pretty well, I think, over the last 30 days, $117. Over the last 60 days, $472. So um, we've been selling put spreads, iron condors, and I even played a little bit with buying. You can see down here some call options when it got real low, and you can see I made $140 right here on the 31st in one, within, looks like just an hour. So I've got a video coming out this week. Keep your eye out for that. We did a trade in Square prior to earnings and bought calls. So I typically am a seller of option premium, seller of options, but I'm playing with in small amounts buying calls when we see we're at certain levels in certain stocks. So that'll be coming out this week. But AMD we've been doing well in, and we are right in the middle of the range on our iron condor, the profit range in the green. See, moving on. Amazon we closed out, and again, yeah, IVR is low, 5.1. So I don't really want to be selling premium in Amazon when it is so low. I think Amazon's a monster stock, going to continue to do well. It's up now a little bit above the 200-day moving average, but I still think it's a good buy. It's just too low on the option premium side for me, and yeah, just in the last 30 days, yeah, 75 bucks. We haven't made a ton, but um, I don't see a big opportunity in Amazon at this point with the IVR so low. So Boeing, that's been doing well with the war. They're both a defense stock and commercial airlines, but you can see we're up $92 here. We've got 112 left to go. We're at 180 put spread, so we've got a lot of room there too to be profitable. Stock prices here, we're profitable all the way down to 180. Um, we collect that full premium, and yeah, I think this was the first, yeah, $247 in just the last 30 days in Boeing. So I do like that stock moving forward. Bank of America, I actually sold or closed out one of the positions. The banks are just going to be down for a while. Once the banks start ticking up, I want to leave at least one on. I've got a leaps option, 439 days out, and then I sold the call against it at 29. So, but Bank of America, the bank stocks have been struggling, but they will come back. I think the beginning of the year, they typically do well in a higher interest rate environment. So that's why I've got Bank of America and Wells Fargo. We'll cover it. Same thing. Closed one, and we've got a Leaps as well. So we'll touch on both of those since they're bank stocks right now. Chewy, uh, I've got a strangle on 17.5, 22, and we're up at the upper end of the range in Chewy. It it's trading at 21, a good IVR of 38. That's because we've got earnings you can see coming up here on 12/6. So it's coming up in a month. And if we look at, we are right in the middle of our profit range. And Chewy has been down. Now it's coming up on that 50-day moving average. Not quite at the 200-day, but it's been down, but I think it's a great stock. Okay, and the next one is DraftKings, and DraftKings has done pretty well for us. It is trading right now at 33 and an IVR of 6.8, so a low IVR, but it has moved up quite a bit. We're profitable anywhere, we're already in the profit range, but anywhere above 26, we're profitable. And if we look at the chart, it did have a big jump up to 33 just last week. So there was an earnings event, and they reported good earnings. So if we look back just over the last year, we've made $1,371 in DraftKings alone. So it's done pretty well for us, and I like it moving forward. So we've currently gone on 2 leaps options, deep in the money calls, 439 days to expiration, and we've sold 2 calls against those at $34. So now, we profit in that range that I just talked about. So Golding, we're going to jump over that. That's a small stock, gold stock. Google, 120. It's trading at 129. We've got the 115, 120 put spread on in Google. And last week it was at 122. So it moved up quite a bit to 129. And the IVR is way down low at 1 though right now. We've collected most of our premium in this put spread. Only $52 left to go, and we've got 40 days. I think I rolled this put spread from November to December last week. Let's see. Yeah, on the 31st we rolled, or no, on right here we rolled. Yeah, on the 31st, we actually did some trades, and we moved out to December. And then you can see here, I also was experimenting with buying calls and made $95 here, and just buying, the 3-day, November 3rd, made $47 here. So again, I'm playing with that a little bit and have a video coming out this week on that. We made 264 in the last 30 days. L3 L3 Harris is a great defense stock. It's done well recently, and we've got we're at 185, and we've got 2 put spreads on, 112 days to go to expiration. There's $20 still left in this, so I'll probably just wait the 12. Why give $20 away? And it's got a 98% chance of being profitable. So I may close that out, but I may just wait and take the 20 bucks in 12 days. 180, 170 in December, and you can see profitable anywhere above this, high 170 range area. And yeah, just in the last 30 days, we've made $224 in L3 Harris. Lockheed Martin, another defense stock, very similar, 2 put spreads. We've done well, 195 and yeah, 195 in the last 30 days. So I like the defense stocks, Lockheed and L3 Harris. They've both got a lot of contracts in a lot of different products that they're supplying our military with. MPW, medical properties, I'm just hanging on to the shares. It's way down, but big dividend that it pays. So I'm just going to wait for it to come back. And it's a healthcare REIT. So I'm pretty sure that it will over time. It's just going to take a little bit of time. Palantir has done, they had a good week as well. I think all these stocks had good weeks last week, but it's at 18.9, so kind of the top end of the range that we've seen it at. And we've got a leaps, and we sold a call against it, so that's a poor man's covered call, and we're profitable as the stock moves up in price. And you can see the big jump up recently, and I think, let's see, just over the last 180 days, we made over $400 in Palantir trading it. So moving on, PR, Permian Resources. This is an oil stock. It's just kind of a flyer. I've got a call option on it. I think oil is going to do well, and this is a target for an acquisition. So got that on there. SoFi actually had a pretty good week last week. It's up to 8 now, but still way below where I think it will be a year from now. So I'm just hanging on 300 shares of stocks, and we've got 10 leaps contracts, and we're just going to wait until it moves up. And as it moves up, we profit more and more. And but we're a ways away from me selling. I'm just going to hang on to this, and I know in a year and over the next couple of years, SoFi is going to continue to go higher. SOXL is the ETF for semiconductors, and it's done well. I rolled out last week from November to December to December. So once we get in that, 10 to 15 days to expiration, I'd like to roll out. It's still got a decent IVR, 17, not great, but we're right in the middle of the profit range. The stock's trading at 18. That's right in the middle. We're profitable down to from 13 to 23. So a huge range down here, 13 up to 23. And it's been trading in that range. SPX, that's the one we didn't do so well last week. And you can see what I had to do here. I rolled out to December, and I widened my strikes to $15 wide. So it's still a hedge, and it's negative delta. So on any down day, I can close that out. But I rolled out. If we look last 180 days, we still made $1,750. But you can see right here, I was at 0 DTE, and I rolled out just for 5 cents, widened the strikes. And we're now have opened the $15 wide, 41.90, 42.05 SPX. So once I get to my max range, like $15 wide, I'm not going to keep rolling and collecting and moving it out. If we're in an uptrending market, I'll get hurt doing that. So I'll just leave this on. I'll push it out further. So I was in 0 DTE. Now I'm in 39 days to expiration. So trading it more like a swing trade, like the monthly options that we trade in all these other trades. So that's kind of the way that I'm working SPX right now. I closed my put side of my Iron Condor in SPY because the market did move up. Now I'm short the 435, 440, so just a $5 wide call, and we're right at the money there. So we'll see if we have a drop. Again, we were up big this week, so maybe we'll be down a little next week to make it up for it, and then I'll close that out. TDOC, Teladoc Health, good medical healthcare stock. They've been acquiring companies and growing. I've got 2 poor man's covered calls, so long, deep in the money calls, and sold calls against them, and it's going to be profitable as the price moves up. And over the last 365 days, yeah, we made almost $400 in Teladoc. Visa, good stock in a higher interest rate environment, which we're going to be in for a while. Even though where we're at today compared to the 80s is not that high, but 235, 230 put vertical spread, so it profits as the stock moves higher. It's at 243 this week, and everything moved up last week. It was at 229 last week. So it's a good fintech. I mean, they're one of the oldest and biggest of the fintechs. So we're going to profit as the stock moves up in price. Verizon, good dividend stock. I've got 100 shares, and we sold a call against it. So that's a regular covered call, and it's been moving up, and we're collecting that dividend as well. We talked about WFC. XLY, I closed out one because the market was moving up. I'm still kind of baffled that consumer discretionary in this environment, the higher interest rate environment, is doing really well. If anybody has a comment on why that is, let me know in the comments below. But I've been thinking that it's been up and then it's going to fall back down. So I've been bearish, but haven't done real great in XLY. Yeah, let me see. Yeah, we've lost 321 over the last year. Actually been profitable over the last 60 days though, $123. But hey, we'll leave that on. I'm 40 days out to expiration. XOM, ExxonMobil, I think it's going to do well. I like the oil stocks going forward. We need to move up. I've got the 110-100 put spread that I rolled to December, and let me see. Last year we haven't killed it, but hey, we made $244 over the last year trading ExxonMobil. But I think, long term, it's going to continue to do well, and it's fairly priced right now, so I'm long oil. All right, guys, I put a link down below for the free options workshop. Be sure and grab that. Remember to hit like and subscribe. Share the video with a friend. Let me know in the comments below what you're trading, what you're having success with, what you may not be having success with, and any questions that you have, I will be sure and respond. Thanks for watching. There's links down below for Tasty Trade, for the Automatic Options Income course, as well as coaching. See you in the next one.